Imagine a company tripling its value on its very first day trading on the New York Stock Exchange. That's exactly what happened with Circle, the powerhouse behind the USDC stablecoin. But is this the dawn of a new financial era, or just another boom about to go bust? Let's pull back the curtain on the IPO that has both Wall Street veterans and crypto diehards on edge. Circle's arrival on the public markets didn't just make headlines, it made history. Priced at $31 per share, the stock opened at around $69, then soared to over $103 before settling at $82 as markets closed. That's a staggering 167% jump from its IPO price in a single trading day. Even more jaw-dropping, the IPO was reportedly 25 times oversubscribed, with massive players like ARK Invest pouring in $100 million, and global giants like BlackRock expressing serious interest. Circle's market cap? After day one, it hit roughly $18.4 billion, eclipsing many established financial tech firms. Why the frenzy? Unlike previous crypto listings, Circle's public debut signals something deeper: the mainstreaming of stablecoins and their potential to become the invisible engine behind global finance. For context, stablecoins are digital tokens pegged to traditional currencies, like the US dollar, designed to offer the speed and borderless benefits of crypto without wild price swings. USDC, Circle's flagship stablecoin, commands a market share of about 26% and has processed over $25 trillion in on-chain volume since its inception. Think about that for a second. $25 trillion. That's not just hype, that's a revolution in how money moves. Jeremy Allaire, Circle's CEO, called the IPO a pivotal moment for mainstream finance and the crypto ecosystem, while VanEck's Matthew Siegel compared Circle to the plumbing that keeps the digital economy flowing, essential but barely noticed unless something goes wrong. And then there's the regulatory wildcard. As Sheila Warren of the Crypto Council for Innovation warns, regulatory clarity is crucial for stablecoins to reach their full potential and benefit consumers. Without it, the entire market could be on shaky ground. Circle's own IPO filings flagged intense and increasing competition and fluctuations in interest rates as real risk factors. Meanwhile, the prospect of central bank digital currencies, or CBDCs, looms large. Could a government-backed digital dollar render stablecoins obsolete, or will it actually supercharge their adoption? Investors are piling in, hoping for regulatory green lights and even greater institutional participation. But with so much at stake, trillions of dollars, the future of global payments, and the dreams of crypto visionaries and skeptics alike, what happens if the tide suddenly turns? Can Circle keep riding this explosive momentum, or are there hidden dangers lurking just beneath the surface? But what does Circle's blockbuster debut truly signal for the future? And could a single regulatory twist or technological leap send shockwaves through the entire system? Let's look at what lies ahead. The most immediate intrigue centers on regulation. If stablecoin legislation passes in the coming year, as many experts predict, compliant issuers like Circle could see explosive growth. Jeremy Allaire, Circle's CEO, calls this IPO a pivotal moment for mainstream finance and the crypto ecosystem. But this path isn't without danger. New rules could be more restrictive or favor only the biggest players. There's also competition, fierce and accelerating. Tether currently holds over half of the stablecoin market, boasting larger profits than even Goldman Sachs, according to the latest reports. Circle, with around 1/4 of the market, is growing fast, but even a slight misstep could tip the scales. Paolo Arduino, Tether's CTO, says, "Competition in the stablecoin space is healthy, driving innovation and broader adoption. In other words, expect a race where only the strongest survive." And looming on the horizon are central bank digital currencies. If the United States, Europe, or China roll out their own digital dollars or euros, stablecoins like USDC could be sidelined, or perhaps find new relevance as bridges between blockchains and banks. Economist Barry Eichengreen warns, stablecoins present both opportunities and risks, requiring careful monitoring and regulation to ensure financial stability. So what's the practical message for you, the viewer? First, the financial system is being rebuilt beneath our feet. Stablecoins are not just speculative assets. They're evolving into the plumbing of everyday payments and cross-border trade. As Michael Saylor puts it, the rise of stablecoins like USDC is a key enabler for institutional adoption of Bitcoin. If you're an investor, this means new opportunities and new risks. Regulation could make or break these companies overnight. Before jumping into any IPO or crypto stock, Scrutinize how well they navigate compliance, innovation, and strategic partnerships. For entrepreneurs or tech enthusiasts, watch how Circle expands its payment network. Seamless, instant transactions are quickly becoming the standard people expect. And if you're simply curious about the future of money, realize that the next big disruptor might not be a bank at all, but a technology company quietly handling trillions in digital dollars behind the scenes. In conclusion, Circle's stock market splash isn't just about one company or even one sector. It's about a battle for the heart of tomorrow's financial system, played out in real time between startups, Wall Street, and governments. Will Circle sustain its momentum? The answer is, only if it balances innovation with trust and adapts to the coming regulatory and technological storms. And here's a secret fact. Few know that Circle's IPO underwriters have a 30-day window to buy over 5 million more shares, meaning the story of institutional interest may be just getting started. If you found this deep dive into the next wave of financial innovation valuable, smash that like button, subscribe for more high-stakes tech and finance analysis, and let us know in the comments, do you think stablecoins will transform global finance?